Hey, yesterday the Federal Reserve, they reduced the Federal Reserve rate down a quarter point. All right, so let's go in a little bit of a deep dive with this, because a lot of times we will get a lot of inquiries right away about, well, the Federal Reserve just decreased the rate this much, or they held it the same. What does that mean to me and my loan in process? What does it mean to my pre-approval? The one we get the most is this. When the Federal Reserve cuts the borrowing rate by a quarter point, a lot of borrowers expect their interest rate that maybe we have in the process. For just example, current rate 6.5%, 30-year fixed, you're in process to buy a home, closing in 3 weeks. Well, the Federal Reserve just decreased their rate by a quarter point. So that means my rate should go from 6.5 to 6.25. Okay? So like, when the Federal Reserve reduces their rate or increases the rates, quarter point, half point, full point, whatever, okay, it will never, I shouldn't say never, it's not the right word, okay, majority of the time, it's not going to equate to your borrowing rate, your mortgage interest rate going down the same amount or up the same amount or staying the same, okay? Rates change every single day. For example, okay, the market had kind of already priced in a quarter point decrease in the Federal Reserve rate, all right? So the market was kind of expecting that. Even with that being said, majority of lenders, us included, Federal Reserve cut the rate quarter point. Almost all lenders had to do a suspension of pricing, and they had to increase rates later that day, okay? Remember, they're not the same thing. They don't equate to the same thing. So the mortgage rates actually went up a tad, okay, as the Federal Reserve is decreasing the rate by a quarter percent. So they're not tied to each other is what I'm trying to say. They're good, okay? So the Federal Reserve cutting rates is good for the economy, okay? Good for borrowing, but it's not automatically going to equate to your mortgage rate dropping the same amount, all right? Good stuff, but two separate things, okay? So that's the one thing we hear the most of. Is also the other thing we talk to people about all the time is, what are rates going to do in the future, right? They've talked about, well, they're going to probably cut them 2 more times. That's what I heard, okay? By several different people, they're going to cut the rates 2 more times over this year. Will they? I don't know. They said, I know it seems like it's leaning that way. But what we tell all the borrowers, and I'm going to tell you the same thing, if you're shopping for a home or you're thinking about buying a home, I would not personally advise you to get caught up into where you think rates are going to go and what they're going to do. All right, what we talk to people about is, hey, example, you rent a home, you want to own a home. We do an application, we go over, here's your sales price, here's your monthly payment, here's your cash to close. What do you think? Can you do this? And when they say, yeah, I can do that, we say, okay, great, you qualify for this. And I would never encourage anyone to say, well, you qualify for this, but at the same time, let's wait to see what the rates do. Okay, let's see what the rates do. Not on a purchase for me. Okay, I would not advise that, because what happens is, even with the rates going, like if they're whatever, you're okay at 6.5%. Okay, and you're holding out for, well, let's hope it goes down to 6.25 to save $37 a month. All right, you're running a risk of that not happening. So you're running a risk of, oh, it's 6.5 today, and my sales price is $250. Well, 3 months from now, when you think the rate's going to go to 6.25, maybe it does, but maybe that same $250 house is now $275. Okay, or maybe they're both low, or maybe they're both high. Maybe the rate doesn't go to 6.25 and goes to 6.75. What I'm trying to convey to you is, do not get caught up into what you think sales prices and rates are going to do when you're looking at trying to buy a new home for yourself. If you feel like the market's going to crash in 3 to 6 months, don't buy a house right now. Kind of simple, right? But like, trying to guess what you think things are going to do, a lot of times ain't going to work in the real estate market. That's what I see. Most people that try to guess where the bottom's at or whatever when they're renting a home, it sometimes doesn't work out in their favor. So again, trying to buy a home right now, currently, payment, cash to close, you're okay with it all, and you qualify for it, and you're okay doing all that, then do it. You know, don't play the waiting game, because I think a lot of times you get stuck in, it doesn't work out. All right. So anyways, kind of went a little long on that, but I felt like I needed to say it. All right, hope that helps. Anything we can do, let us know. 239-437-4278. See ya.